Welcome to the World Wire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. In 2025, President Trump, back in the White House, escalates the U.S. economic strategy with aggressive tariffs. These tariffs target not only rivals, but also allies like Japan, aiming to force industries to relocate to the U.S. This is part of Trump's America First vision, prioritizing U.S. interests over global stability. In April, Trump declared Liberation Day, imposing up to 50% tariffs globally. Countries had until July 9 to negotiate or face severe economic consequences. This policy is about economic dominance, not fair trade. Treasury Secretary Scott Bessent projects $300 billion in revenue from tariffs by year-end. This strategy disrupts the global trading system the U.S. helped build post-WW1. By targeting allies, Washington signals that old rules no longer apply. The tariffs have real-world effects, like a 50% tariff on imported copper, causing U.S. prices to soar. Threats of a 200% tariff on pharmaceuticals have shocked the industry. These actions show the Trump administration's willingness to disrupt global supply chains for domestic goals. Allies like Japan face difficult positions, caught between unfavorable terms and economic instability. The aggressive stance creates a global crisis, challenging traditional partnerships. The policy forces nations to prioritize U.S. relations, often to their detriment. This economic war risks global instability. As allies are treated like adversaries, the world watches as the U.S. reshapes its role in the global economy. Japan is directly targeted by Trump's tariffs, facing a 25% tariff on exports. Japanese negotiators faced an impossible situation, dictated terms under threat of economic punishment. The deal Japan accepted is seen as an unequal treaty, far beyond simple tariffs. Japan must invest $550 billion in the U.S. by 2029. With the U.S. controlling project decisions, Japan receives only 10% of the returns, essentially subsidizing American industries. This arrangement is a modern form of economic tribute from an ally. If Japan refuses a U.S.-selected project, new tariffs can be imposed at will. Analysts call this a protection racket, fundamentally changing the U.S.-Japan relationship. The alliance, once based on mutual interests, is now strained by economic coercion. Japanese negotiator Ryosei Akazawa fought to protect the auto industry but faced a power imbalance. The U.S. was unwilling to compromise, reflecting in the final agreement. Japan's economic sovereignty is compromised, funding its main competitor to avoid harsher penalties. The deal has sparked a national debate in Japan about its reliance on the U.S. The forced investment diverts capital from domestic growth and innovation. Japan's position as a junior partner in the alliance is questioned. The crisis forces Japan to reconsider its global strategy and alliances. The economic pressure reshapes Japan's future direction and strategic decisions. The unequal treaty highlights the challenges of navigating U.S. economic policies. The forced treaty with the U.S. ignites a political firestorm in Japan. Public outrage over the deal's terms, $550 billion investment, 10% return, dominates headlines. Citizens feel their government was bullied, sacrificing national wealth and dignity. Prime Minister Shigeru Ishiba resigns amid plummeting approval ratings and protests. His resignation symbolizes the failure to protect Japan's interests against U.S. pressure. The crisis sparks a debate on Japan's over-reliance on the U.S. A nationalist sentiment rises, questioning the alliance's wisdom. Major companies face instability, with tariffs making exports expensive. The forced investment diverts resources from domestic growth. Japan's political landscape is scarred, prompting a re-evaluation of its global role. Japan, under U.S. pressure, looks to the BRICS bloc for alternatives. BRICS, including Brazil, Russia, India, China, and South Africa, offers a new global system. For Japan, BRICS presents a chance to diversify economic partnerships. The bloc builds an economic system independent of U.S. control, focusing on de-dollarization. BRICS countries create payment systems and trade in national currencies, offering an escape from U.S. economic warfare. Japan's pivot to BRICS is timely, as the bloc criticizes U.S. tariffs. Brazil's President Lula da Silva's defiant stance resonates with nations tired of U.S. dominance. Japan sees logic in aligning with a group advocating a multipolar world. The Trump administration's threats against BRICS may backfire, making the bloc more appealing. Japan faces a choice: remain a subordinate U.S. partner, or explore new partnerships. The shift is strategic, driven by necessity, and a desire for mutual respect. BRICS offers a credible alternative for countries seeking sovereignty. Japan's alignment with BRICS marks a significant strategic shift. The global power balance is shifting, with Japan exploring new economic horizons. BRICS has expanded, becoming a global heavyweight. New members like Egypt, Iran, and Nigeria join, representing 54.6% of the world's population. The bloc aims to build a new world order with a parallel financial architecture. BRICS develops institutions to rival the US-dominated World Bank and IMF. Trading in national currencies insulates economies from US sanctions. The vision is a multipolar world, emphasizing sovereignty and mutual benefit. This appeals to nations seeking development without U.S. demands. The U.S.'s actions accelerate BRICS' growth as an alternative system. Countries join BRICS to escape U.S. economic dominance. The bloc becomes a geopolitical magnet, reshaping global power dynamics. Japan's interest in BRICS reflects a fundamental realignment of global power. Japan isn't alone. Other U.S. allies face similar economic pressure. South Korea deals with a 25% tariff and a forced investment deal. Tensions rise as U.S. actions strain alliances crucial for regional stability. A raid on a South Korean factory in Georgia highlights unfair treatment. The EU faces a 15% tariff and a $600 billion investment commitment. The EU's deal lacks real negotiation, reflecting U.S. economic leverage. The UK, despite its special relationship, negotiates from weakness. The Trump administration's tactics force allies to question alliances. Allies explore new partnerships, inadvertently strengthening a multipolar world. The global realignment challenges traditional alliances and power structures. The US's approach pushes allies to seek alternatives, reshaping global dynamics. Trump's tariffs reshape the world, unraveling the post-WTO order. Allies like Japan and the EU reconsider their global roles. The shift moves power from the West to new centers like BRICS. The global economic system impacts everyday life, from prices to jobs. BRICS offers a multipolar model, challenging U.S. dominance. More countries align with BRICS, shifting global power permanently. A new post-Western world order emerges, changing international relations. Trump's policies may isolate the U.S., accelerating its decline. Allies build a world independent of American leadership. The new world takes shape in deals, alliances, and financial systems. Japan's pivot to BRICS marks the end of one era and the birth of another. The global landscape becomes more complex and unpredictable.